Hello students, this video is for Ignou students who are pursuing Mcom from Ignou. Every day I am going to upload a new video related to this topic. So please subscribe my channel, and if you like it then please press the right button. Okay, let's start with it. Financial management. Financial management means management of finance. Finance is the basically lifeblood of business. Any wrong decision may lead to solvency of the firm. Growth and development of a firm depend upon its financial policy. So basically what it means, for running a business, definitely you need funds. If you lack funds, how you're going to run your business? So you need to decide your financial policies very wisely, so that it does not lead to any kind of solvency, and it is highly required for growth and development of firm. Now, please learn this definition also. That is, financial management means planning, organizing, directing, and controlling the financial activities such as procurement and utilization of funds of the enterprise. Basically, it is concerned with two things, that is, procurement of funds and effective use of funds. You need to procure your funds very wisely. Any wrong decision leading to procurement of funds can also affect and can lead to heavy cost. So let's read a few points leading to procurement of funds. The funds procured from different sources have different characteristics in the terms of cost and control that a manager must consider while procuring funds. The funds should be procured at minimum cost and at balance risk and control factor. Procurement of fund decision includes, first, identification of source of finance, determination of finance mix, raising of funds, division of profit between dividend and retention of profit. Let me elaborate. First, the finance manager will decide from where the fund will be raised, that is the source of finance. And finance mix का मतलब ये है कि from like we will not procure from fund from one source only. We can procure funds from different sources, either in the form of equity, debenture, in the form of long term loan, short term loan, in this way. Okay, fund raised by equity shares are best from the point of view of company, as it has no repayment liability. FDI and FII are two major sources of finance from abroad, along with American depository receipt and global depository receipt. Effective use of such funds, like if I've procured the funds, now I'm not utilizing in an effective manner, then what's the point? You need to decide wisely in what manner you are going to use those funds. Okay, funds manager is also responsible for effective use of funds. If the funds are not utilized in a manner so that they generate income higher than the cost of procurement, there is no meaning in running the business. The funds are to be employed in a manner so that the company can produce at optimum level without endangering its financial solvency. Every financial manager must possess sound knowledge of technique of capital budgeting and must keep in view the need of adequate working capital and ensure that while firm enjoy an optimum level of working capital, they do not keep too much funds blocked in inventory, book debt, and cash. Like, if you're having too much of your funds being blocked in debtors and you are borrowing the same amount from bank or from equity or debenture holders to run the business, it is basically the fund manager should decide that the company is not wasting its already procured funds. Okay, so the funds which are already blocked in inventory, book debt, or unnecessary lines and not being utilized should be used in a proper manner. Okay, now finance manager occupies a very important position. He is one of the dynamic member of the corporate managerial team. His role day by day is becoming more and more significant. Financial manager job is not only that of accountant. Financial manager is expected to manage the funds in such a manner as to ensure their optimum utilization and their procurement in a manner that the risk, cost, and control consideration are properly balanced in a given situation. Functions of financial manager. The six functions of financial manager. First is estimating the requirement of funds. He is supposed to estimate how much the funds does a company require. Then he has to decide regarding the capital structure, in which way the funds will be raised, either in the form of equity or in the form of short term, long term. Basically, what kind of capital structure the company is going to have. Dividend decision, how much dividend the company is going to give to their shareholders, he has to decide with the top level of management. supply of funds to all part of organization. Obviously the organization has different departments, and every department is require funds to run its activity. So financial management, he is going to decide how much fund will be allocated to that particular department. Evaluating financial performance, once the fund is being allocated to department, definitely the particular department needs to run in a proper manner and provide effective return to the company. If that particular department is not providing desired return to the company, he has to think whether that department should be continued or not. Okay, keeping in touch with stock exchange quotation and behavior of share price. Now, there is an interrelationship between investment decision and financial decision and financing decision. Okay, now investment decision basically means whenever you're investing in any project, you need to decide from where you are going to procure the finance for that particular investment. So we can say the investment decision is dependent upon financing decision. Now, when we say if like company is going to give less amount of dividend and going to retain large amount of profit, so we can say the dividend decision is also dependent upon your financing decision. Okay, if the firm allocates more fund to fixed asset, lesser amount would be available for current assets. So financing and liquidity decisions are also interrelated. This is possible by evaluating each decision relating to its effect on shareholder wealth. A finance manager is also facing challenges while pursuing his work. Like shareholders nowadays, even in minority, they are becoming very demanding and vocal. They are not only interested in increasing sales or decreasing cost, they want growth in their return. As a consequence, a financial manager has to concentrate not only on EPS, that is earning per share, but also on market capitalization. Increasing risk in market is another challenge faced by financial manager. With outset of liberalization, privatization, globalization of business, the business risk have been multiplied. That's all for today, and I hope you enjoyed the video and you enjoyed the learning. Is there any doubt, you can write down in the comment box. I will be happy to help you. Please guys, motivate me, please like my video, please share, and I will be coming with new video which will be on time value of money very soon. Thank you.